Robin, hello, good morning. It's a bit cold out there.
Good morning, thanks for having me.
Yeah, it'd be good fun actually, this breakfast and the discussion we're about to have. And very much looking forward to seeing your slides and hearing what you're going to tell us about the world. So perhaps you could tell us a bit now. The markets have had a terrible start to the year and we're seeing stock markets fall. Is that a true reflection of the global economy?
I think some people are worried that we could be heading for some kind of global economic disaster. I actually think that's not correct. And I think most economists think that's not right. But the markets are reacting very, very strongly to a number of things, number of items of bad news which are occurring, some of which could and should have been expected, I think some of which perhaps not. So we've had the Federal Reserve start to raise interest rates, and clearly that's been trailed for a very long time. Markets reacting though in quite a negative way because they're worried about what might happen next. Our view is not much will happen next, but the markets are concerned. China is a particular driver of this. China's been slowing for a very long time. The most recent data has showed that slowdown continuing. No great surprise there, but the markets are very, very nervous that perhaps this, I think for the first time they're really waking up to the fact that China is going to become a much more normal looking economy than it was 5 years ago, and that's worrying people.
But it'll still be growing.
Oh, it'll still be growing by a lot.
Yes.
I mean, last year it grew by 7%, or just under 7%. We think this year it'll grow by 6% and maybe next year by 5%. But we have to remember that China is either the second or the largest economy in the world, depends on how you measure it, and the amount that it contributes every year to the global economy is the same amount of demand as a small Western European economy. So China's influence is still very great and generally very positive, but people are worried, and there are some fault lines in China which could cause things to go wrong. Our view is that if we did start to see a more significant wobble, and that means much more significant than just the stock market, the government could intervene quite aggressively to stop a collapse, which I think is what people are really worried about.
Yes.
But the markets are reacting in a very nervous way.
So how much of the reaction do you think is emotion and how much is based on real economic concerns?
I think a lot of it is emotion, but the real economic concern, or perhaps the dawning reality, is that we're probably halfway through the global economic recovery, and that sounds pretty depressing because the first half wasn't that great. For a long time in Europe, for a long time even in America, there was a sense that this recovery is running behind the curve, that we're not really seeing the kind of expansion that we used to expect to see when countries rebounded from economic disasters. Everyone, I think, is now recognising that we're probably more than halfway through. I mean, we're already looking out towards 2020 and thinking, well, where's the next recession going to come from? That's a genuine concern for the markets, and that doesn't mean that the global economy will drop into recession this year or next year or the year after. But I think there is a recognition that the best years are probably behind us now, and that's quite a tough message to take.
It is a bit,
when you think that the last few years weren't that great.
Yes, and when you think of the political messages over that period of time as well. One of the impacts, of course, is the whole question of the oil price. Yeah. And as the oil price was starting to fall, so this was heralded as a great driver for positive growth, beneficial right across all economies. And actually, that's not necessarily the case. I mean, for everything that sounds good, there's also a downside. Manufacturing's a downside in this particular instance, but it seems to have given impetus to the worry, the concern, the shock, the economic problems, as opposed to an impetus to economic benefit.
That's right. I think markets the sentiment is very important in markets.
Yes.
As you say, in the oil price, there's always two sides to this. As oil prices come down, that reduces people's spending on energy bills, and electricity bills come down or should come down, and that enables people to spend more money on the things that they want to buy. Generally, and I think that's actually true this time as well, that is the more powerful effect. But of course, there are countries around the world, businesses around the world, who are very dependent on high oil prices for their success. Those start to do very badly. Because markets or financial market participants right now are nervous, they're putting a lot of emphasis on the negative story. So they're looking at energy companies, they're looking at countries which export a lot of commodities or energy-based commodities, and they're seeing that those nations are coming under a lot of pressure. And I guess one thing which has changed, which is quite interesting, is of course in the past, the US would have been an unambiguous winner from lower oil prices.
Yes, it would have been.
And of course now, because of the shale revolution,
absolutely,
it's a much more mixed message. I think even there it's important to remember that the drop in oil prices is putting $100 billion into consumers' pockets every year. That's a lot of money to go into consumption, but people forget that.
Well, we all do notice it actually when we go and fill up with petrol. There's one point I'd pick you up on there though, with the falling oil price, and you said it would benefit, quite rightly, people and their energy consumption. Only in part is the answer, because whilst gas consumption, I'd agree with you, and oil consumption, I agree with you, electricity possibly not so much, because all the green energy additional costs are placed on your electricity bill, which is why certainly in the UK, surely, that some of our heavy industries are complaining so much about the way that we're transitioning to cleaner energy, because they bear disproportionate high costs as a consequence.
That's part of it. It depends on the country that you're looking at. Certainly in the UK, it's there's a very, in most countries around the world, there is a push to more green energy sources. And as you say, a lot of those have to be subsidised. That's actually an issue that we at the Economist Group have a bit of a problem with. We prefer to see other mechanisms to try and encourage the move to a more green society. But you're right that certainly for electricity, a lot of the burden of funding those subsidies as we move to a greener energy mix is falling on the electricity industry, and that's having an impact on the prices that consumers face. But I think overall, lower energy prices are a very good thing for consumers, and that effect, though, is of course dissipated across many, many millions of people.
Yes.
It's much easier to write headlines about particular energy companies.
It is indeed. And the speed, anyway, of the fall in the oil price, I think, is partly a reason for some of the problems, because it's been very, very quick. And although we focus on China, and indeed just have a moment to go, the Russian situation, because they've been very much an energy exporting country. Putin sort of flexes his muscles all the time and clearly has ambitions. How do you think this is all going to play for them, and what do you think their reaction will be?
Well, in Russia, there's a few things. So the first point to remember is that for Russia, what we would describe as the easy oil, that's largely gone. Yeah. So now they're having to look much further north into Siberia. That's more difficult to get at. It's more expensive to produce. And so as oil prices come down, that puts them under a lot of pressure. It becomes more difficult for them to be profitable as an oil producer. That has significant economic implications. Clearly, oil revenues are down significantly because of lower energy prices. Their production costs are up. That's draining away at the public purse, as well as at private enterprise, but I think most importantly at the public purse. That, of course, causes a good deal of discontent in the country, and the really worrying thing from our perspective is that as the country becomes more discontent with its economic lot, the government pursues a strategy which many countries often do pursue, which is that they become more nationalist abroad. Absolutely. So what we have seen Putin do is become much more aggressive and interventionist in international fora, most obviously in Ukraine, but then recently also in Syria. Our nervousness is that because we believe energy prices will remain low, he may feel the need to do something else this year in order to keep the population content. Yes,
and that is something of a worry, because when a country like that reacts or acts, you're never quite sure which direction it's going to go in. I think to a certain extent, Ukraine and Syria also gives it port access, doesn't it?
There's certainly in Syria, there's definitely one part of the motive there is to maintain access to a port, which is very important for its navy.
Absolutely.
But I think there's a bigger story here about demonstrating to its own citizens that Russia can be an actor on the world stage.
Yes, and fits in a bit with sort of pictures of Putin showing his muscles and wrestling a bear and all those other extraordinary photographs.
Last year in 2015, he featured on the cover more than any other world leader, and never in a good way.
Interesting. I did not know that. So coming slightly closer to home maybe, and looking at these things from a different perspective, we've been doing quantitative easing, the thing that nobody had ever heard of, names, a phrase that was hardly, I suspect, the meat and drink within even the economist world or central banking world, has become part of our daily lives. Now, I appreciate in the UK not so much for a bit, but quantitative easing has played a part in the recovery. What's going to happen with that? In one sense, we've all been waiting for it to stop. In another sense, quantitative easing, as I say, did play its part before, and if we've got another sort of wave of economic troubles coming through, is there anything left in the tin?
Well, I guess a couple of things. So firstly, quantitative easing is specifically is buying up of assets by the central bank and injecting money into the economy through that media. So we stopped that in the UK, we've actually stopped it in America too, but that is a kind of monetary tightening, just stopping that activity.
Yeah, because it's still there.
Obviously, the next step would be to start raising interest rates, which the US has done and the UK has not. Now, of course, one big question before we saw central banks get to the point of stopping QE was how they would exit this. There was a lot of nervousness that they would try and sell the assets that they have built up. That's not happening, so they're hanging on to these assets, and that's very important because obviously if they try to offload them now, you'd see the problems that we currently have in financial markets would get an awful lot worse.
Absolutely.
So there is a lot of nervousness about the ability of central banks to shrink their balance sheets again, and our view is that that's something that could take 20 or 30 years for them to work their way back out of this.
But in the Eurozone, of course, they're not
still
shrinking.
Buying.
They're still
buying.
We sit, as the UK, between two competing views of what to do. You know, the US, as you say, it's starting to raise interest rates. The EU is still quantitatively
That's
easing.
right, and I think when you look at the European economy, the likelihood is they will have to do more and become more ambitious around quantitative easing and other sorts of policy options because the economy there is particularly dire. So I think we're going to see more. Obviously in the US there's a move at the moment to raise interest rates. You mentioned whether there was anything left in the tank if things went wrong.
Yes.
I think the interesting thing is, as I mentioned earlier, that we can already see that this pace of economic recovery is kind of peaking and we're into the dog days of the recovery. One of the things the Fed has been very worried about is building up the headroom for them to be ambitious in easing policy again by the time the next recession came around.
Right.
The interest rate rise we just had is partly around their view of current conditions.
Okay.
It's partly around them trying to build up just a little bit of room to do something in 3 or 4 years' time when they expect, not specifically at a point in time, but they know that at some point America will drop back into recession. What are they going to do? There is still room for more quantitative easing. We could buy more assets. We could intervene more aggressively to support fiscal spending through the central bank mechanism. But we are currently in a situation where when you look at most of the world's major economies, and I include the US within this, even though the US is much stronger than many of other rich economies around the world, we haven't seen the pace of recovery that we would like to see.
No.
We still see very high debt levels, which is holding back the willingness of people to spend and in businesses to invest. Central bank intervention to sort of ease the pain is still important, and we're probably still a very long way away from getting back to the kind of normality that we used to think about 10 or 15 years ago, and that is going to require the central banks to remain much more active in these unorthodox policies than we have seen in the past, and I suspect will remain much more active for quite a long time.
So, little prediction before we go back and join everybody. And I'm saying, right, 2019, 2020. Are you positive about the US or negative? Are you positive about the UK or negative? Are you positive about the Eurozone or negative? And Quo Vadis for China?
Well, I think by the time we get out to 2020, at least one of those places will be back in recession. By that point, that would be interestingly, that would be a very long recovery.
Yes.
So it would be quite unlikely that we can get to 2020 without America or Britain sliding back under again.
Okay, so slow, steady, continuing recovery is not
China,
something to look forward to continue with.
It would be unprecedented to see economies such as Europe, the UK and the US go for such a long period without seeing a contraction out to some sort of recession. So it would be unlikely, I think, we can get all the way to 2020 without seeing that somewhere around the world. You also mentioned China.
Yeah.
I think a recession in China is still unlikely, one of the things that markets are worried about. But the thing we can say with high degree of certainty is by the time we get to 2020, China will be a 4% a year economy. It's at the moment it's a 7.
I know.
10 years ago it was a 14.
Yeah.
That of itself is going to feel very, very different for the world. It doesn't need a recession for China to feel it's not playing its part.
But at the same time, it's 4% on a bigger economy.
Absolutely, of course.
We better go and join everybody else. Thanks, Robin.
Thank you very much.